Well, good morning, everyone, and thank you for joining us today at our 2024 Capital Markets Day. I'm Imogen Moorhouse, the CEO of Oxford Metrics, and my co-presenter today is David Deacon, our CFO. We are now just halfway through our 5-year strategic plan, announced in October of 2021, and we thought this would be a great opportunity to update you on our progress, hear from one of our customers and technology partners, Dreamscape Immersive, meet some of the team, and show you our technology in action. We're really glad you could join us today in our newly opened facility, which is an extension of the main Oxford headquarters located a few miles from here. But first, before I get started, I'd like to thank Emma Colvin, our Head of Communications, for all her hard work in organising this event, and for all the other Vicon team members, IVS team members, FTI and Numis to arrange this event. Thank you. So, turning today's packed agenda and a bit of housekeeping. From now until noon, you'll be hearing from David and I, as we are now in full execution mode in year 3 of our plan. We will run you through what we have been up to, where we were going, and what this means from a financial perspective. Following our presentation, you'll be hearing from Dreamscape Immersive on our long-standing partnership. And I'm sure you'll have plenty of questions, so we've factored in time for Q&A at the end. From noon until 2 p.m, there'll be 4 cohorts who will go through the Dreamscape Immersive Clockwork Forest VR experience. I'll explain the choreography of the groups at the end, so you know where to head to. Lunch will be served during this time, so plenty of time to eat and watch the joint IVS and Vicon demo, which will be running at the same time further on from the Dreamscape volume. Our management team are available to chat during this time also, so lots to see and do. And finally, the restrooms, if you haven't found them already, are located to your right. I'd like to introduce members of the Vicon and IVS management teams who are here today alongside our chair, Roger Perry. From Vicon, COO Pablo Callejo, CTO Mark Finch, CMO Chris Hoskins, and Head of Global Sales Andy Ray. And the 2 directors of Industrial Vision Systems, Earl Yardley and Andrew Waller. And I'm also delighted to say that Zoe Fox, our CFO designate, has also been able to join us today, ahead of starting with us officially on the 1st of July. But before we get started, I must remind you we won't be commenting on current trading today. No new material information will be provided. I would be very grateful if you could take note of all the disclaimers here in our safe harbour statement. I'll take it as read that you acknowledge it. So, who is Oxford Metrics? We are a smart sensing and software business that uses vision and other sensing technologies to derive insights into real-world applications. Oxford Metrics consists of Vicon Motion Systems, a motion capture company established in 1984 that captures the motion of humans, animals and robots in the life sciences, visual effects, location-based entertainment and engineering markets. And more recently, we have ventured into new applications with our acquisition of Industrial Vision Systems in November 2023, a smart vision company established in 2000, working in quality and compliance in smart manufacturing. And here are just some of our customers, well, the ones we can talk about, and you might recognise some of them. Across the 5 markets we serve, our customers include major sportswear manufacturers, automotive, aviation and aerospace companies, research institutes, hospitals, global technology brands, games companies, visual effects houses, location-based entertainment providers, including Immersive Gamebox, where the last Capital Markets Day was held, and contact lens and medical device manufacturers. Do you think you know Oxford Metrics? Oxford Metrics has a long history in smart sensing. Over the years, athletes have used our technology to improve their performance, added realism to blockbuster movies, and is favoured by iconic brands, as well as picking up a few awards along the way. For those of you who are familiar with Oxford Metrics, and for those who are not, here are just some of the highlights from the last 40 years. "40 years moves fast." So moving to more recent stories, Loughborough University's School of Sport, Exercise and Health Sciences has been using motion capture to study sporting performance since the 1990s. In 2016, the National Centre for Sports and Exercise Medicine, complete with three Vicon labs, opened to deliver education, research and clinical services in sports. In collaboration with the ECB, Professor Mark King has been conducting research into cricket biomechanics for over 15 years to enhance player performance and reduce injuries. Previous projects have been focused on male batters, but more recent work shifted to studying under-19 England women's players. Zurich University of Applied Sciences is working with Swiss startup Spheri on an interesting combination of biomechanics and game design. The Execube is an immersive rehabilitation programme for athletes with ACL injuries. The Execube is an immersive fitness game consisting of 3 walls which serve as projection screens for 3D game environments and provides haptic feedback when players make contact. There are currently Execubes at 50 different global fitness and rehabilitation centres. Catapult uses motion capture to help them simulate orbital environments to prepare for servicing, refuelling and assembly operations in space. The dark room seen in the video is the company's in-orbit service and manufacturing yard, a room used to simulate orbital environments using robots. What is critical for Catapult is close proximity operations. How do they successfully get 2 objects to move and perform operations close to each other and fly in formation in orbit? To do this, they use our Vicon system to track exactly where the robots are positioned in the environment. Vicon systems have been used to add realism to video game characters for over 20 years, from AAA titles such as Call of Duty and Assassin's Creed to the 2023 Game of the Year and BAFTA award winner Baldur's Gate 3. One of the main Far Cry 6 characters incorporated the performance of the Breaking Bad actor Giancarlo Esposito. Signature moves of footballers were mocap to add realism to the AAA franchise FC24, including Cristiano Ronaldo. Cyberpunk 2077 included the voice and motion of Keanu Reeves, one of the lead characters in the game, Johnny Silverhand. Hogwarts Legacy, within 2 weeks of launch, the game sold more than 12 million copies, and by the beginning of 2024, global sales totaled 25 million copies. Snoop Dogg. The Crypt Your Enthusiasm music video sounds improbable. A gamified Web3 metaverse project built in a video games engine starring Snoop Dogg blended with Larry David, featuring appearances from long-dead rappers Tupac Shakur and the Notorious B.I.G., all wrapped around an NFT component and powered by mocap. Whilst the video is high profile, it's not the product of a well-established VFX house. is the work of Astro Project, a small startup formed in 2022 by founders who had never used mocap before. Moving to IVS. Vision technology is essential for guiding robots in the evolution of smart manufacturing. The solution here was provided to a leading manufacturer of touchscreen displays. From welding small screens to large format multi-touch units, the vision system observes minute details and delivers precise automated computations for critical laser projection alignment. This IVS in-process inspection solution enabled a bearings manufacturer to conduct comprehensive compliance checks throughout the production cycle to improve product quality. The proprietary vision technology scans the surface of every bearing to detect faults, automatically adjusts for all sizes of bearings with no operator intervention required. Continuous development of this AI-based inspection enables the systems to spot patterns and anomalies in surface deviation whilst providing robust warranty protection for the customer. Brands today need right first-time quality control. IVS ensures this happens. Their systems enable precise, non-contact vision inspection and measurement, a very desirable attribute when verifying contact lenses or medical devices. IVS is trusted to ensure every product meets stringent specifications. In this example, their technology has transformed the manufacturing operations of a blue-chip global medical manufacturer producing implantable orthopedic joint parts. The trays are loaded with knee replacement parts with the capability to load multiple trays and automatically conduct the inspection. The process is streamlined, reducing manual labour, waste, and boosting operational efficiencies. With actionable insights to inform decision-making and continuous process enhancement, we're excited about the possibilities in this market. And returning to Vicon, here are some of the very most recent customer stories from our 40th anniversary magazine, Standard. PUBG Madison was the first US visual effects stage to use the new Valkyrie 26 megapixel cameras to shoot the new Battlegrounds title. The customer was impressed by the improved pipeline efficiency the new system provided, immediately saving them time and money across the production. Zerospace is a New York-based business that pivoted during the pandemic from a VR experience provider with 100 employees to rebuilding from one employee to become a multifunctional virtual production business used by Nike, Disney, Paramount, and Justin Bieber. The IM4 Lab has been set up to help Canada's Indigenous community tell their stories using leading-edge tools and technologies. The organisation offers training in immersive media production, offering native artists the tools they need to deliver innovative storytelling through an Indigenous lens. The University of Derby uses simultaneous Vicon optical and inertial tracking to take the guesswork from coaching in high-stakes climbing. By studying high performance and mid-level climbers, coaching techniques are being refocused on areas to improve using objective measures. Worcester Polytechnic Institute are using Vicon as part of the control loop for tiny drones that can fly at 12 metres per second. Their future plans involve a larger system to track drones at 30 to 35 metres per second, which is the same speed as the flight of the common swift. And finally, Sheepgate at Texas A&M is an interesting nod to our past, as Sheepgate, not human gait analysis, was the very first application of Vicon 40 years ago. This study was to research HPP, which is a rare metabolic bone disease. Sheep were used as they walk in a comparable way to humans with the condition, and they have 2 sets of teeth. So how did the team manage the heat and the animals? Early morning captures, a bag of food, and a companion sheep, apparently. In October of 2021, my predecessor Nick Bolton presented the new 5-year plan under the tagline Sense, Analyse, Apply. This is all about extending sensing capabilities, enhancing analysis modes, and embedding our IP in other areas. We're doing that through a programme of organic and inorganic investment with an aim to grow revenues 2.5 times whilst returning a 15% adjusted profit before tax, exiting the 2026 financial year. We're making good progress. Since the plan was announced, we have sold Yotta to Causeway for 52 million in cash in May of 2022, over 6 times ARR and at a premium valuation, providing a strong cash balance to pursue our growth ambitions. In July 2022, Vicon launched the premium Valkyrie camera to drive organic motion capture growth through upgrades and new market wins. And in 2023, August, presented the new markerless modality to extend our sensing capabilities. And in November of 2023, we acquired Industrial Vision Systems, an earnings-enhancing acquisition in smart manufacturing, bringing us new opportunities and some great brand names to add to our client roster. The financial progress of the 5-year plan will be covered by David a little later. So now I'd like to review the growth opportunities in more detail. To recap from the prelims, firstly, a synergistic plan. It's important we build a coherent, scalable and cost manageable group. Motion capture, this is the traditional marker-based or inertial-based motion capture business that you know. Markerless, our new technology platform to be commercialised through existing and new markets. Smart manufacturing, vision technology applied in industry for quality control. And the power-up quadrant, anything that accelerates the other 3. So motion capture, as you've known us to date, is our historic and core market. And who is the competition in this space? And here are the main optical and inertial competitors. Motion Analysis is a US-based optical mocap company, primarily serving life sciences and engineering. OptiTrack is a US-based, but ultimately Chinese-listed optical mocap company, primarily serving the visual effects and engineering markets. Qualisys is a Swedish-based optical mocap company, primarily serving life sciences and engineering. PhaseSpace is a Canadian active marker-based company, primarily serving the engineering market. ART, a German-based optical mocap company, primarily serving the engineering market. BTS, an Italian optical mocap company, primarily serving the life sciences market. And Xens is a US inertial tracking company, part of the Mvela Group, who have Chinese connections and who have recently delisted from the Nasdaq market. How do we win against them? Brand, product, quality, service, and technology leadership. The slide shows the competitors' most recent estimated revenues into a chart and table. But please note the TAM is larger, but I've chosen to focus on companies closest to Vicon and of reasonable size. With a SAM of around £130 million and a CAGR of around 10%, Vicon's fiscal year 23 performance was about 34% of this market. So even in our well-established business, we still see plenty of growth opportunities to capitalise upon. And we are well set up to do just that. We have strengthened our team who are focused on execution with our improved hunt and farm sales and marketing strategy. With more boots on the ground, globally we have and continue to invest in resources, more salespeople, sales enablement, an SDR function for lead generation, and better position for customer success. So why don't we buy some of them? Well, these are the companies we do see most frequently and continue to watch all of them very closely from an industry perspective. So you were asked about, industry consolidation perhaps. Well, these are and have been on our list, but they did not meet our strict M&A criteria at the time. There are others for now who are much more interesting as we look for M&A targets to act on that add value. Markerless. For completeness, we show a TAM with showing 2D and 3D markets, but we'll focus primarily on the 3D market, as the 2D market is much more lower tech and more consumer-based. This TAM shows the main markets we serve, with each of the markets showing a CAGR in excess of 15%. And the largest opportunities are in visual effects and VR, which aligns with our strategy. Why will we succeed in markerless? Vicon's offering is aimed at the high end of the technology space. We can already track 6 people in real time with high fidelity at low latency. And we can track markers in the scene too. Many markerless companies are single mode, so seek to replace marker-based tracking. We believe the two will continue to coexist together for a good while. Will markerless cannibalise the existing marker-based business? Well, it would be naive to say a categoric no here, as some applications could be better served with markerless technologies, whilst others would use a multi-mode system, markers and markerless together. But other applications can only use or be operationally successful using markerless. So, how does machine learning work with markerless? Let's first review a definition. Machine learning is an application of AI. It is the process of using mathematical models of data to help a computer learn without direct instruction. This enables a computer system to continue learning and improving on its own based on experience. And this is how Vicon uses this in our markerless project. Here is a side-by-side video of Vicon's markerless software tracking the same data in both versions. On the left is version 0.6 and on the right version 0.16. Please note the data in both is the same. As you can see in the left-hand video, the character to the far left does not solve successfully. But in the right-hand video, the problem is resolved. How? We use our machine learning algorithms and training models whilst adding to our growing vision model dataset to improve the accuracy and realism of the outputs. So what does success look like for us in the markerless space? We reinvigorate the well-understood latent opportunity in location-based entertainment, whilst addressing the visual effects market demand with expansion through opening up our traditional commercial models. We intend to be the gold standard in markerless as we are in marker-based, winning more market share alongside our existing customer base and building a quality software and services revenue stream on top of the marker-based business. We are considering 3 client options for these. The first is CapEx, rather like the marker-based. We will place an increased value on software over the marker-based model with annual service contracts, as the rapid advancement in the software means access to the latest version is very desirable, as you could see from the video. Problems are fixed as you iterate the software. The hybrid model would use a reduced down payment with a multi-year contract for software and services. And further down the line, we could consider a full OpEx model, a technology as a service package, as you were. It's not pure SaaS because hardware is involved. So as you'd expect, we're working closely with our customers on these models. As with everything we do, it will be aligned to our customers' needs. And a hybrid payment example using a 300 customer sample, remember Vicon has 10,000, could be a $50,000 down payment with a $15,000 ARR over 5 years for software and services. This option provides greater economic accessibility compared to the traditional CapEx model. Our go-to-market strategy is that we already have the sales and distribution organisation in place to sell this to our existing customer base. With the already mentioned sales and marketing investment in the motion capture quadrant, we'll be well placed to execute on this globally. New market opportunities would be resourced accordingly. And what are the opportunity and threat of AI here? The threat here is in the text to video or text to animation space. We keep a close eye on all developments in this technology space. Companies such as Pika Labs, Animate Anyone, Meshcapade, formerly Pose GPT, SayMotion, formerly Motion GPT, and the recent launch of OpenAI Sora, a text-to-video tool, in February 2024. So do we see these tools being adopted in the visual effects industry? We do believe these tools are useful for generating internal pitches, storyboards, or shorts to quickly articulate visions or ideas. Take this video, for example, showing Sora being used to generate a surreal short. It is very unlikely motion capture would have ever been considered for such a project. So do we consider these to be a current threat to the use of motion capture in the film and games industry? Not at this stage, as these are generic tools which are trained on very large data sets that lack specific detail, to be able to generate relevant content. But, as we know, this world moves quickly. So the obvious question is there an opportunity for us to leverage these tools to make our own machine learning and AI products more powerful? Absolutely. Whilst we continue to develop our own in-house IP in machine learning and AI, as we have for several years, we continue to review these tools to understand their strengths and limitations, and if they can accelerate our roadmap. Sora, for example, could be leveraged when it improves to generate video data that we could use in our synthetic training pipelines for our own ML models. Moving to smart manufacturing opportunities with IVS. Machine vision is a frankly enormous TAM, with a CAGR of 12 to 13%, covering many applications that range from semiconductor counting and inspection, barcode and text readers, to waste detection and management. Machine vision market technology providers here are very large global entities, such as Cognex, SICK, Omron, Teledyne, Keyence, etc. These companies are manufacturers of the inspection technology, not usually the company that ultimately supplies the end user. So we'll choose to focus on two sub-markets that IVS actually does serve, which is contact lens inspection and automated metrology for implantable orthopedic medical devices. The contact lens inspection TAM includes manual, semi-automatic and automatic inspection technologies, with a CAGR of around 4.5%. The manual market being almost half of the TAM, so a significant future opportunity with the technology move to semi and fully automated inspection over time. There are potential acquisition opportunities in this area. The competitors in this market are mainly German: Trioptics, Harrer Hoflinger, Compar, Optocraft, etc., with Compar being the closest to IVS, selling similar vision technologies. So why do IVS win? Because they are a focus provider of tailored, smart, specific solutions, specialists, not generalists. Another very large TAM in automated metrology here, where parts inspection is not a choice, but currently uses many different measurement modalities, such as touch probes and coordinate measurement machines. But in medical device inspection, for obvious reasons, non-contact measurement is preferable. So the case for moving to vision inspection is well understood. The TAM includes dental, upper and lower extremity implants, and spinal implants. The lower extremity TAM includes total knee replacement surgery, with around 800,000 procedures carried out annually in the United States alone, with total hip replacement not far behind at around 540,000 per annum. The competitors here, Bruker Alicona, Hexagon, Renishaw, etc., are mainly using probe and CMM measurement, whereby the end users are moving to non-contact measurement. As IVS is currently a business with a focus on UK, Ireland and the United States, even these geographic TAMs and SAMs show considerable growth opportunity via inorganic and organic activities. Our go-to-market investment in the commercial activities of IVS has started, is well underway, with a focus on the US medical device market. And what of the opportunity or threat of AI and smart vision inspection? IVS continue to develop their own specialist machine learning and deep learning programs to learn and improve for faster deployment. Once trained, the processing speed improves, which enables greater productivity. The threat from large generic data sets is unclear at present. IVS solutions are tailored. So would a medical device manufacturer use a generic solution trained on their competitors' data? Don't know. Okay, well, with that, I'll now hand you over to David, who will take you through the CFO part of the presentation. David.
Thank you, Imogen. I think I've said hello to many of you, but if I haven't, just like to add my own warm welcome. So I have a short presentation for you that will cover three sort of topic areas. The first is just to give you some insight into our investment strategy. Secondly, a little financial progress report on the 5-year plan. And thirdly, I'll talk about that cash on the balance sheet and future capital allocation. So in terms of investment strategy, in R&D, we spent 7 million in cash terms last year, which is equivalent to around 15% of our revenues. We have a team of 75 people, 10 of which are involved in hardware, and 65 are involved in software. And when we invest, we apply a rigorous process of evaluation in order to maintain or improve on the return on capital employed that we reported last year of around 16%. And the R&D investment goes into, first of all, updating our current IP. Think of this as fueling the Vicon business. This is about encouraging our existing customers to renew and buy new systems from us. It's about maintaining our dominant market position, and it's about attracting new customers as well. And this effort then results in the release of new cameras every 6 years or so, and we regularly release software into the marketplace as well in all of our various core markets. And another way to think of this investment, this relates to the R&D capitalization I always talk about when I do the interims and the prelims, but another way to think about it is this investment underpins the 10% CAGR that we typically see coming out of Vicon. That's certainly been the case over the last decade. Then in addition to that, we are investing in our 5-year plan, where we announced a few years ago we were going to invest 2.3 million. And the fruits of this investment are here today, and you'll get to experience those in a little while. Accounting-wise, we've been expensing this investment, but during the course of this year and then into the future, we will gradually begin to capitalise that investment. And I put research here. We do modestly invest in research more generally. This is part of the DNA of Oxford Metrics, and these projects have all contributed to where we are today as an IP-rich UK technology business. And finally, well, we obviously spend some R&D in terms of maintaining the IP and supporting customers. But the sum of the above over the course of this 5-year plan should lead to an improvement in our return on capital employed, possibly up towards 25%. So in addition to R&D, we also invest in training. Now, this is not something we actually shout about particularly, but the human IP is a very, very important part of the mix, and especially given that we've recruited around 50 people over the last couple of years. So this year, we're actually investing £500,000 in our people. And this is about developing their leadership skills and their capabilities, which in turn, hopefully will lead to greater motivation, greater creativity, and efficiency. And ultimately, this investment will add to shareholder value. And the other area of investment is in value-added M&A. In other words, adding earnings accretive acquisitions. So our focus at the moment is on smart manufacturing. We're looking for businesses with revenues of between 3 to 9 million. And we're looking to build out from IVS to build a meaningful presence in this marketplace. And so far, we've discovered a broad and diverse range of opportunities that actually fit very, very nicely. And when we look at these acquisitions, we're looking for IP-rich businesses. We're looking for businesses with good cash metrics, businesses with revenue visibility, which might mean they've got a strong position in their niche as well. We're also looking for able management teams, and we're also looking for businesses with a culture that looks a little bit like us. And most importantly, we're looking for businesses with latent growth opportunities in terms of revenue and profit that will benefit from being part of Oxford Metrics. And actually, if you go through this checklist with IVS in mind, well, the IVS acquisition is earnings enhancing. What have I said? So the IVS acquisition is earnings enhancing. They have a fantastic financial track record and a dominant position in their niche. And in addition to that, their culture looks very much like Vicon. Actually, feels like they've been part of the family for quite some while. And IVS also have a very able management team. Andrew and Earl, I don't want that to go to your head, okay? So having ticked all of the boxes with the IVS acquisition, that's the reason why we did the deal. So turning then to the financial progress report. So we started 2021 with revenues of 27.5 million, and this was entirely coming out of the motion capture business. By 2026, as Imo said, we're looking to increase this 2.5 times, and our goal is to hit a revenue number of 70 million. We expect 52 million of this to come out of the motion capture business Vicon, 8 million to come out of Markerless, and a further 10 million to come out of smart manufacturing. So in terms of progress in motion capture, well, last year, as many of you will know, Vicon reported record revenues of 44.2 million. And we believe that this, coupled with the 10% CAGR that we've typically seen coming out of Vicon, means the business is well placed and is certainly capable of delivering on that goal. And then there's Markerless. Well, 2 or 3 years ago, it was just a twinkle in the eye, maybe of Mark, I'm not sure who. But now, today, it is finally here and a reality. In fact, it's the other side of this wall here. So our expectations for this year are fairly modest. As we move through FY25, we should begin to see revenues developing as we move and expand in LPE, LBE, and into other markets. And of course, in terms of smart manufacturing, IVS will add 3.5 million in revenues this year. And over the next few years, we expect IVS to grow in its own right. But there is a delta, and that delta will come from acquisition. So right now, right at this moment, we're actively pursuing a number of opportunities in this space that will deliver on the revenue goal. In fact, if we have a fair wind, we've got a good chance of actually exceeding that goal. And the 5-year plan is not just about revenue, of course. It's about delivering on the 15% adjusted PBT margin. And actually, looking at last year's numbers, we came jolly close. We achieved 14.8% last year. And I've done a few sums, and assuming that our M&A activity is all cash, and assuming we achieve our 5-year plan, then the adjusted EPS coming out of this business will be approaching 8 pence a share by the end of the plan. And that compares to 2.7 when we started. And of course, at the same time, we pay a dividend. We have a progressive dividend policy with a goal of maintaining cover of 2 times. So back in FY21, we paid 2 pence. And last year, we paid 2.75 pence. So finally, just turning then to talk about the cash and future cash capital allocation. Our goal here really is to maintain the investment in R&D and our people that I've spoken about. But I guess our first priority, overarching priority, is to deploy the cash in M&A. I also foresee with the business growing that there may be a need to deploy some in working capital, although to be fair, I think that will be fairly modest. And we'll also retain a meaningful amount of cash on the balance sheet in order for it to remain robust. As we all know, macroeconomic events do come along from time to time, and Oxford Metrics has in the past and will in the future ride out any stormy waters. And we feel that sets us apart. And certainly for some investors, it does provide some comfort. And then the final item, well, we may choose to return some cash to shareholders. But right now, the M&A opportunity that I'm working on with Imo more than justifies keeping the cash on the balance sheet with a view to deploying it in M&A. That said, the board keeps this under constant review. And if and when in the future we can't see the justification, then we will definitely consider a return to shareholders in those circumstances. So that concludes my little presentation. I look forward to speaking with you during the course of the rest of the day. And if I don't, we'll see some of you during the interim results in June. And in July, of course, I'll be handing over the baton to Zoe. And I just want to take this opportunity to wish you and Imogen great success to infinity and beyond. Thank you.
So thank you, David. I'd like to finish by summarising the key points about why Oxfordmetrics is such a great business. We've made good progress to date with our 5-year plan. We continue to grow and develop our IP-rich products and services. We have a proven growth business celebrating our 40th anniversary this year. We are global, providing robustness and diversity of markets and customer bases. We have a progressive dividend policy and a robust balance sheet with cash for us to execute on our goals. Thank you. So just before I hand over to Cecilia and Sylvan, I'd like to invite any questions from you.
Quick ones. First on R&D, on both the motion capture side of things and in IVS, how realistic is it to, or could you talk about the areas in which the R&D in both sides of the business could be leveraged together, as it were?
Great question.
And then can I just rattle through the three?
So the
Just
very first question
is
go and see the demo.
Okay, that's fine. Okay, and then the second one is on markerless.
Yeah.
Just in terms of, and maybe this is better to the customer, but in terms of the choices that are out there, because obviously you talked about your sort of incumbent competitors, as it were, but in terms of trying to be the gold standard in markerless, who do you think is the closest to you to wanting or sharing that ambition? And then thirdly is for David. PBT margin of 15%. You're kind of nearly there, and you're 3 years away, and there's a lot of IP in this business that you could leverage. Sort of how much can we push that 15% margin in, say, 2-3 years' time and say, actually, for what is largely really a software underneath business, you know, the ambition should be higher than that?
You tell that one. I'll think about
Yeah,
Mark.
I guess 15%, you could argue is cautious. I think a lot depends on, the revenue mix that we see over the next couple of years. And if markerless takes off in the way we expect, and there's a, high software content, then that's all good news for the bottom line. So I'm not going to give you a number, but there's definitely potential for upside.
When it comes to markerless competition, it's a really nascent market, and there's competition all the way. If you actually did an analysis on it, you'll find everyone from Hawkeye, Apple, right down to tiny startups with 3 people in a shed. It's really at that level. Obviously Hawkeye is a well-known brand with an end market, and the Apple solution sits on your iPhone. You just download it. In fact, we use it. Our apps free, but we are at the high end of the technology space. So in terms of competition, who are closest to us, again, really markerless only focused businesses who have no commercial activity right now. They're all technologists, engineers, very clever, 5-6 people, mainly Israeli actually. They're the closest at the moment, but nobody. The Qualisys, the OptiTracks of the world are reselling other people's markerless at the moment. We don't know if they have developed their own, but I would be surprised if they'd been able to get the level of investment in the markerless team that Oxfordmetrics did for Vicon at the beginning of the 2021 plan. More questions? And then Casper after.
Yeah, could you talk about the move into industrial vision? Obviously, previously your markets had been medical.
Yeah.
The foray into, or charge into industrial vision is a slightly different market, different demands, and how the sales cycle works out in that. Factories to be set up, and what's the sales cycle in industrial vision?
Yeah,
market?
there's, do feel free to talk to Andy and Earl yourself, because they have, I think, 50 years combined experience between them. But the sales cycle is a little bit a mixture of retrofit to existing lines, new lines, standalone cells, all different types of cycles with different timings, lengths, sales cycles, delivery cycles, which is actually quite good because you're not reliant only on massive factories. But you obviously want to be in with the massive factories, but you're not wholly reliant on big factory projects. So it's interesting, and then the size of the systems is quite similar to Vicon in a way, in terms of a little retrofit system right through to a big cell can be similar types of order sizes to Vicon, but obviously it's a project delivery over a period of time rather than a one delivery, because they're building things as they go. Casper?
Yeah, just two very quick ones for me. First on markerless. Have you seen any new markets or use cases opening up? I mean, the price point does suggest that you could move swiftly into sort of short form video and advertising and democratize that space. There's been a lot of conversations around sort of studios looking at technology to be able to compete at bigger platforms. I mean, this would definitely fit that bill.
Well, it just so happens that we have pre-visualization using markerless is a definite potential market. So the concept is your animator is sat behind their desk, sitting away, and they suddenly want to do a mocap, and they just run into the space, mocap themselves, go back, animate. That is a thing. In the past, it would be, I've got to go and put markers on, and I can't do it. Now I'm just going to go and do it myself, and animators love doing it themselves. They're, artists. They're very precious of their creations. And that's one of the things that's interesting about this threat of the lower of the text to video, text to animation. Animators working in the top end of the industry are absolute perfectionists. They are true artists, and they don't accept things that don't look right, feel right. So that is definitely one. And then, as I say, one of the demos hopefully shows a synergy between markerless and IVS technology, smart manufacturing.
Just one more, if I may. Large vision models, LVMs. How much of an advantage does sort of curated data sets offer against a generic model? And does a curated data set over time become an essential part of an industrial planning or smart manufacturing solution?
Well, it's about, you need the thing needs to know how humans move. It will fall over if it gets surprised. It's never been shown something. So that's where the curation comes in. I think you'll find if you look at the way that AAA games and films are made, where people are being, thrown about, hugged, tackled, thrown on the floor, that's a massive problem visually compared to a technician on a production line doing this. So there's a bit of both. That's an easier problem. Training a model on a 6 people pile-on in a football game is a harder problem, as it was for marker-based a few years ago. Marker-based systems used to fall over in those situations. We got better at filling those gaps in. So you can't see the marker, it's not there. So you need to be able to fill that data back in. Same problem with markerless. So both. Yeah. Okay. I think we'll take a couple more questions, and then just to keep us on time, we'll move forward, and then you can obviously ask us questions.
Thank
Hayley.
you. Morning. Thank you for the presentation. Just quickly, in terms of when you're analysing potential acquisitions, I understand how you can kind of assess whether a company's got good cash generation, good IP. But in terms of the cultural fit, that feels like it might be tricky to kind of analyze from the outside looking in. How do you approach that?
You've got to meet them.
Yeah, just as simple as
You've got to meet them.
Yeah, I mean, historically, many of the deals that we've done, you know, those have been built on relationships that we've worked on over a number of years. In fact, even IVS, there's a
connection.
There was a
Andrew will
connection
tell you about.
that Andrew will probably tell you about.
Yeah, from years back with Vicon.
But yeah, you've got to go and kick the tires and smell the air. And I think got pretty astute at figuring out good businesses and bad businesses, I think.
And then just in terms of cash on the balance sheet and keeping the buffer, what's the minimum number that you hold there?
Well, this will be up to Zoe eventually.
Sorry.
Well, I think the business needs 6 million to function. And then what should the buffer be? It could be anywhere between 5 and 10. But it's there really, God forbid, but, if there's some calamity, you need time to be able to react to that. And having that cash there does protect, provides that protection.
One more question and then we'll move on, thank you. And we'll obviously be around later. Ian?
Right. There's obviously a lot of talk about sort of processing power, access to processing power. Are you going to be able to sell enough? Are you going to be able to get hold of that stuff from whoever your provider is of that resource?
Are we under NDA? Well, we are in technology partnership with a leading chip GPU manufacturer. That's all I can say.